Hey all, welcome to ShareTreck. It is 15th of April 2022. Boy, what a week it was. This is our weekly roundup. It's going to be pretty short because I'm producing another video for you, and it will be a surprise to be launched later this evening. And there is not much to talk about this week because it is incredibly short. And I had one of my really difficult moments this week when my prediction was absolutely wrong on Wednesday, and on Thursday I was gun shy. I was not willing to make any predictions, but yeah, I did miss out quite a few cues, and I'm going to talk about that. So let's get started. What a week it was. It was a compressed week with mega volatility, as I would say. I think the long weekend kind of truncated this week with Friday being off and options expiring and all that. With the compressed volatility, it became very, very difficult for participants. Some genomic stocks lost more than 10% this week. It was terrible, and it needs a lot of guts to stay in this market. So one of the things that I found on hindsight is that the 10-year yield dropped during the first couple of days of the week and then picked up on Wednesday. So when the 10-year yield drops, it's positive for growth stocks and tech stocks, and they all picked up, and NASDAQ picked up because it is more of a risk-on kind of stimulus when the 10-year yield drops. However, on Wednesday, it reversed sharply, and with that, all the tech stocks and NASDAQ started dropping significantly. So that was what happened. Anyway, I didn't know what hit me. I was disoriented for quite a while. And yeah, and the other aspect that stood out this week was Elon Musk making a bid for Twitter. It was so unorthodox. And right now, both Elon Musk and Twitter are in a really bad situation, because if the deal doesn't go through, then Elon Musk is going to lose value on his 9.5% of the stake, because Twitter prices are anyway going to fall. And Twitter is in a bad situation because it's going to lose value, or it's going to lose control of its own company, and Twitter may go private. So when Twitter goes private, that means there'll be no shareholders, and it will not be quoted in the stock exchange, but it will perform its business the way it is. So this situation is so bad, whether the deal goes through or not. So if the deal doesn't go through, what's going to happen is Elon Musk is going to lose money because his 9.5% stake is going to be worth less than what he bought it at. Twitter is going to lose value because its share prices are going to fall back again, and it's going to be in a very difficult situation. Employees are likely to be demoralized with all this action, and retaining good talent in this tight job market is going to be difficult for Twitter. Now, if the deal goes through, what's going to happen is Twitter is going to go private. In other words, it will be out of the share market, and Elon Musk will be controlling Twitter. And now Elon Musk has to take care of SpaceX. He has got to take care of Tesla. He's got to take care of the Boring Company. He has to take care of the solar company. And all of these things. And on top of that, he has to deal with all the mess that Twitter has got to deal with as a social media company, which is global. And in this global environment, you have a situation where Elon Musk has got factories in China, which are manufacturing Tesla. And he has also got a good deal of market share in Tesla for his electric cars. What if tomorrow China was to say that Twitter cannot allow so-and-so to be spoken, or such and such tweet to be published, or so-and-so to be banned from Twitter? How is Elon Musk going to act? Is he going to just wind up Twitter and go back? Then what happens to Tesla shareholders if China retaliates by saying that he cannot sell in China, or puts extra tax on Tesla in China, or puts more controls on his gigafactory in China? So he has to think through all those things, which I don't know that he has done. And I don't know if he has consulted the Tesla board before making all these kind of actions, or whether he has consulted his own lawyers to make sure that he's not running afoul of SEC. Because it's a very serious matter when you move stock prices in the market for a non-valid reason, because many people have their pensions invested in the stock market. And all this volatility causes problems. So I think that whatever happens, there's going to be a whole bunch of class action lawsuits in the works. And also, this is extremely dangerous for Tesla shareholders, because Tesla EV is operating in a very competitive market with all the competitors trying to get in, and it needs the undivided attention of Elon Musk to make sure that it's a success. When you look at the Mars shot with SpaceX, that also needs a lot of attention from Elon Musk, and it needs a whole lot of efforts to send a rocket to Mars and make sure that the project is successful. And amidst all these things, taking on Twitter, it seems like the tail wagging the dog. I mean, Twitter can have its own problem. Elon Musk can get his Mars shot out of the way, stabilize Tesla, get the succession plan in place, and have a CEO in place for Tesla, and then look at taking challenges like Twitter. But right now, getting into Twitter, it's going to create problems for the entire Tesla brand and Tesla shareholders, as well as for Twitter. That's what I think, and let's see what happens. It will be very interesting to watch. Now let's go and have a quick look at what happened to NASDAQ. Okay, let's start off with the VIX. If you look at the VIX here, you will see that we jumped sharply on open on Monday, and then we started going down after that for the subsequent 2 days, and on the last day, we picked up again. But if you were to look at this against the QQQ, you'll find that there was no correlation. These are the 4 candles that correspond to what we saw with VIX. So there was no correlation here at all. So some other forces were at play during this week. And if you were to look at the 2-year, if you look at the 2-year yields, they went down all the way from Monday. So this is the 11th of April, this is the 12th, this is the 13th. And on 14th, it went up. So when it was coming down, the market interpreted it more as a risk on. So people were going ahead and boosting the price of NASDAQ index, as well as tech shares, and even some of the genomics, which were all risk on assets. And then on Thursday, when the yields picked up again, they dropped everything. So that's how I would interpret it, based on all the reading that I have done to try to find an explanation of what happened last week. And when we look at the put call ratio, we are still in the bull side of it, even though marginally. And if we look at the S&P 500, we can still see that we are firmly within the diagonal line of resistance. And each of these candles is a 1-day candle. This is the last day, and we have come down here. We still have support at 433.64. MACD is absolutely bearish, and momentum is below average. So we'll have to see what happens next week. The Twitter drama is going to continue next week because it has to play through. And if the deal doesn't go through, Twitter share prices will fall, and that's going to have its own domino effect on the market. We'll have to wait and see what happens. I do not have a faintest idea of what's going to happen out there. If we look at US oil is still high, but well within yesterday's, the previous day's price. So this is still a benign or a dovish sign, whereas the MACD is still moving towards a signal line, and momentum is still flat but above average. So oil is not giving us any clues. So with that, let us go and have a look at the crypto sector and look at Bitcoin, which is our main here. Bitcoin is again straddling the support, which is available out here, the diagonal green line. And the MACD is bearish, but tending towards the signal line. Momentum is below average, so it's not very strong. I would look forward to Bitcoin bouncing off this support when the market opens on Monday. And if we look at gold, gold has kind of sacrificed a little bit of its gains. And today there is a slight green candle out here for gold, but it's neither here nor there. We still have resistance at 1984.00. And overall, I think gold is in a bullish streak, because I will show you the cup and handle pattern, which forecasts a breakout. And even if you ignore the cup and handle pattern, you have this ascending price line on which you have a kind of pennant, and that always leads you to spike outwards. So both ways, I think gold is likely to go up, especially with inflation being where it is. That brings me to an end of my overall review of NASDAQ and crypto and all that. Now let's go on and look at what's happened with our genomics shares. So I have two dogs. This one is Cory, and she finds it very amusing or confusing when I am talking to the camera. And she gets very restless because she thinks I've gone nuts or something like that. So she constantly wants to sit on my lap. So right now she's sitting on my lap and she's watching what I'm doing. And she's very concerned about my mental health, I think. So there it goes. Now let's look at our genomic shares. So we have the genomic shares lined up here. On the right side, you can see DNA, Regeneron and Pfizer are on the top, and all three of them are green. But as we predicted, most of them went red, including IBB, which is our ETF that we use to get an overall feel of where the biotech segment is at. So that went down by 1.24%. And I think that overall, the market being risk averse with the interest rate going up, our genomic shares are going to have a lot of trouble in the following weeks until we lose the inflation. Now, when it comes to inflation, I still think it is a supply chain related issue. And with a lot of people starting to travel, I think most of the supply chain issues are also going to be resolved. And most probably, when we get the next reading for inflation, it's likely to be much more benign. And hopefully, it should all peter off before the third quarter of this year. And that is my expectation. Because most places are opening up. The only caveat I would put is that the Omicron surge, which is happening right now, it's not on news media in most places. But I personally know a few people who have caught COVID recently. And also the hospitals are also full. The fatality is not there. And also the government is not broadcasting as much stats as they used to before. And media has found other things like Ukraine-Russia war, and Elon Musk buying Twitter and all those kind of things. So you still have to be careful about Omicron. If it starts coming to the situation of lockdowns and all that, then we'll have a problem again. But right now it seems that most of the governments have said we don't have enough money to keep on subsidizing everybody for a lockdown. So it's free for all. So it's going on. Hopefully the supply chain also eases and we get back to normal. And each one of us practice our own individual responsibility of making sure that we don't catch COVID by taking care of all the precautions like wearing a mask and washing your hands and all those things. And we should all be fine. So I'm thinking that inflation is going to subside, but there will be definitely damage done by the fact that we are raising interest rates because employment levels are likely to fall due to that. And that could be a concern. And as long as those concerns remain, all our biotech shares are going to have a lot of pushback. Some of them are likely to do better this year, like CRISPR Therapeutics, for example, and Vertex, and Beam. These have got some positive candidates going on in trials. And once they succeed or have any kind of positive news from the FDA interim, even that is going to boost their shares a little bit. And there are some other activities happening with big pharma. I'm going to talk about that in a subsequent video, which is very encouraging for the genomics sector. I'll talk about that subsequently. But overall, I think we have had a very bad week, except for DNA, Regeneron, and Pfizer. Everyone else has suffered during this week. And the next week also appears to be a bit risky. We'll see what happens on Monday morning when the market opens and what happens with Elon's Twitter saga and how it impacts the market. We'll take a call at that point of time. Right now, it's too early to make a call. With that, I think I would like to bring today's weekly wind up to an end. That's about all I have for you. Hope you have a great day, and watch out for my next video, which is going to be a special on a particular company in our watch list, which I think is making excellent moves, which are going to pay a lot of dividends in the near term. So I'm going to be talking about my 10 best stock picks, and one of them is going to be from our watch list out here. So with that, you have a great day and a wonderful long weekend. I'll catch up with you later today. Bye for now.